You can wait for a few days, for a few weeks, but definitely it shouldn't be a long-term buy and hold product. This is a short-term trading instrument. But yes, you can hold it for more than a day. All right. So that is number one misconception over there. All right. So the DLCs I mentioned that we listed it and launched it on SGX 5 years ago, 2017. We listed it on SGX, and we only started with 10 DLCs back then. There was the 3 times and 5 times DLCs on the Hang Seng Index and the MSCI Singapore Index, but we have since expanded every year. We expanded to single stock DLCs in 2018, and right now in 2020, fast forward to 2022, we have over 300 DLCs listed as of yesterday on the SGX. And in 2022, we introduced the 5 times and 7 times DLCs on US indices. So that's the DLCs on the S&P 500 index or the Nasdaq 100 index or the Dow Jones index. All right. So that's something that is quite revolutionary. It allows investors to gain exposure to the US market during Asian hours. So we've come a long way from 10 DLCs to over 300 DLCs now listed on SGX in a short span of 5 years. We have a wide product offering for investors to choose from. As you can see in the table on the right over here, we have all the large cap stocks, definitely. So on Hong Kong side, we have the Tencent, Alibaba, Meituan. On Singapore side, we have the 3 Singapore banks, as well as some of the mainly the blue chip stocks, which investors can gain 5 times leverage, long and short too. And of course, the US index that we just launched last year as well. All right. So in today's session, we do have the focus is on the Hong Kong and the US market. We want to allow investors to see how they can use the DLCs, to gain exposure to the Hong Kong market and the US market from the comfort here on SGX. All right. So a lot of people are used to or more comfortable with trading on the SGX due to its regulatory framework and etc. They're not too keen to venture into the Hong Kong stock market or too keen to venture into the US stock market, but you still want to gain exposure to, like, say, Tencent, or you want to gain exposure to the Nasdaq or S&P 500 index. Well, the good news is that you can do it here in the comfort of the SGX securities market, and you can trade it in Singapore dollars. All right. So you don't have to worry about changing your currency to Hong Kong dollars or the US dollars, etc. All right. So the US indices is something that we launched last year. So this allows investors to gain exposure to the US indices during Asian hours and in SGD. All right. So this is something that we are very excited about. This is something that we feel that it's quite a game changer. It allows investors to gain exposure during Asian hours, and in times of volatility like we've seen in the market these days, where the US indices have been quite volatile, and also during Asian hours, it gets even more volatile than usual during the Asian hours. So investors who think that there are high impact news during Asian hours and they want to get in ahead of the US market open, they can make use of this US index DLCs to do that. And as well as, if they want to hedge their portfolio in case of high impact news during Asian hours, they can use that US index DLCs as well to hedge their overall US investment portfolio. All right. So this is something very interesting, which I will highlight a bit more later on in my examples that I've shown of how investors can trade this US index DLCs. All right. So on the STI, so this one is a bit closer to home. This is something that we launched last year as well. So we launched this STI DLCs as well. These STI DLCs come in the form of 2 times, 5 times, or 7 times leverage. So even though we are advocating for investors to use the DLCs to gain exposure to the US market or the Hong Kong market, we decided to launch this FTSE Straits Times Index as well. Our popular local Singapore benchmark. I'm sure you guys see on CNA, etc. everywhere. This is our very popular local index benchmark. We wanted to do a DLC on this as well. We already have the MSCI Singapore Index DLCs, but we wanted to do the STI DLCs as well. And we finally managed to secure the license to do this 5 times and 7 times DLCs on STI. So a lot of people do say that, Singapore market is a bit boring. It doesn't move a lot. It's quite, not very, it doesn't move a lot. It's quite boring. So, with this 2 times, 5 times, or 7 times leverage, potentially it can make it a bit more exciting especially for the active traders out there, because you can also go long and short direction on the STI. So if you're holding a big bag of a DBS or UOB stock, which you're going to hold for life because of the dividends, but you see an impending correction coming, you could potentially use the individual stock DLCs or the STI short DLCs to hedge your overall long-term investment portfolio. All right. So we hope that this new addition, the STI, has been beneficial for investors so far. this STI and US index DLCs that we've launched last year, so far the adoption has been growing and it's very encouraging. However, we do see a large percentage on the short DLC side for the short US index DLCs or the short STI DLCs. There's a huge percentage on the short side. So I think definitely that's a result of the market going into correction territory and a bear market right now. So definitely investors have been piling into the short DLCs to make use of the instruments, which we're happy. And we do hope that investors can see more investors can see the benefit of the DLCs for both a long short trade or even with the leverage factors. All right. So I think in this short session, actually it's not really very short, but in this session, I will go through just the basics of DLCs first for those who are new to the DLCs. How does the DLC work? The basic fundamentals of it. Before I go into some how do you trade the DLCs? So I'll give some examples, of how investors would trade the DLCs. And then lastly, if I have time, I will go a bit into our website, dlc.societe.com, and show you guys, how you can make the most out of our website to learn more about the DLCs and get all the information that you need to trade the DLCs. All right, so the first part here I've been going through so far is about the basics of the DLC, the fundamentals. I mentioned that the DLCs have a fixed leverage factor and they are traded on the SGX and they have a long and short DLCs as well. So some of these are fundamentals. And remember, this slide is important for those who are going for the quiz later. So this tells you the basic of how does the DLC provide the leverage. All right. So the DLCs, the daily performance of the underlying asset times by the leverage factor will equals to the daily performance of the DLCs. All right. So for example, in this example over here, DBS is up by 2% on a close-to-close basis. On day 2, it's up by 2% from its previous day close. In that case, the 5 times long DBS DLC will be up by 5 times of that. So 2% times by 5 is 10%, while the DBS short 5 times short DLC will be down by 10%. So it's quite straightforward. Another misconception of DLCs is, you might think that this is a warrant or this is an option type product because it's leverage involved. But besides the fact that it's also another leverage instrument, it is nothing like a structured warrant or nothing like an option. All right, there is no optionality impact on the DLCs. How the DLCs work is this simple payoff over here. On a close-to-close basis, the DLC will give you that 5 times or 7 times performance on the daily performance of the underlying asset, whether it's an index or a stock. And this happens every day on a close-to-close basis, all the way from the day it starts listing all the way up to maturity date. All right, so that's how the DLCs work. It is much more linear in terms of its price performance compared to, say, your options or your structured warrants. So there's no out of the money, at the money, in the money concept. There's no implied volatility concept. DLCs just provide that 5 times or 7 times leverage on the daily performance of the underlying asset on a close-to-close basis. All right, so this example highlights that. And you can see over here, the long DLC is up by 10% when DBS is up by 2%. So take note, this will come in useful later during the quiz. All right, so this is a screenshot from our website, dlc.societe.com. This is an example of our Meituan long DLC, DAVW. Stock code is DAVW. So the DLC names, you can see that the name tells you a lot about the DLC. At the top left-hand corner of this slide over here, you can see the Meituan DLC. It starts off with the underlying asset, the name Meituan, followed by the leverage factor 5 times, and then long or short, whether it's a long DLC or a short DLC, followed by the issuer name, which is SG, which stands for Societe Generale, and then the expiry date in year, month, date format. All right, and then DAVW is the stock code of the DLC. So if you want to trade the Meituan long DLC, you will go into your Tiger Brokers account, trading platform, you'll key in DAVW, and then you should be able to see the Meituan long DLC over there for you to buy and sell. All right, so in this screenshot over here, you can see that, the Meituan stock is up by 8% on this day over here on 23rd March. And the Meituan long DLC is up by around 40%. So that is 5 times the performance of the long of the underlying assets daily performance. So this happens every day on a close-to-close basis for the DLCs. All right, so that's an example of how it works. You can also see that the Meituan DLC is priced around 40 cents. So we usually price the DLCs between 20 cents to $2. So this is the price of the DLC. So the price of the DLC is different from the price of the underlying asset, but the DLC price and the Meituan share price will move in line in the sense that the DLC price will move 5 times of that of the Meituan share price, 5 times of that on a close-to-close basis, on the daily performance of the Meituan's share price. All right. So take note over here. And the difference in price is also another reason, another benefit of why you should use the DLs, why you should consider using the DLCs to trade Hong Kong stocks. With such 40 cents level or 50 cents level or $1 level, it is at a fraction of the cost of the underlying stock's share price. All right. So this allows you to gain exposure to the underlying stock, whether it Meituan, Tencent, or BYD or Alibaba, at a fraction of the cost of the underlying stock's actual share price. All right. So instead of going into Hong Kong stocks, sometimes the minimum investment sum can be quite high. For example, to gain exposure to a Tencent stock, you need at least about 8K or 7K Sing dollars to buy at least one to gain exposure to a Tencent stock listed on Hong Kong Exchange because of the minimum lot size. So it's quite a high minimum investment sum. So for those who do not want to put in so much money at one go into the Hong Kong stock, you could potentially consider the Hong Kong stock DLCs as well, because you can go in for as little as a few $100s. The minimum lot size for the DLCs is 100 units, same as stocks. So 100 units times by 40 cents is $40, but of course you will not go in only $40. You have to take into account your broker commissions, etc. So, but you can go in incrementals of $500 or $1,000, etc. And you can split out into a few tranches if you want. So that gives you the flexibility as well, especially if you are a short-term trader on the Hong Kong stocks. All right, more benefits. I'll share more later on why you should consider using the DLCs to trade Hong Kong stocks. Now over here, very simple. You can see the 5 times performance on a percentage basis, right? Of how the Meituan Long DLC gives you that 5 times performance of the underlying stock, Meituan stock daily performance. And similarly, on the 5 times short Meituan DLC, DZNW, you can see that it was also down by close to 40%, around 40%. So, if you get the direction wrong, then this is your losses will also be magnified. So this is how the DLCs work, the long and short DLCs. Conversely, if Meituan stock was down by 8%, then the Meituan short will be up by 40%, while the long DLC will be down by 40%. All right, so I hope that this gives you a clear example on how the long and short DLC works. It's quite simple, to be frank. There is really no optionality impact, nothing, no implied volatility impact. It's just 5 times of that of the underlying stock's performance on a coast-to-coast basis.
So,
all right.
Marcus, allow me to interrupt.
Yeah.
Wow, I do see a lot of questions asking where is the reward now. So maybe it's time for you to relieve the first questions for those people to try to answer it to get the reward. And I see this page is just nice because a hint for it, you can find the first question answer in this slide. Okay. So yeah,
Okay.
That's your first question. Then let's my colleague to put it in the comment, all right, comment group. So audience, please pay attention to the question there. So answer it within 1 minute's time so that my colleagues will put a stop there. So
okay.
Yeah, Marcus, I have a question.
Yeah, so I will just, the first question is what does DLC stand for? Trust me, this is the easiest question of the 3 questions. So fastest fingers first, please hurry up, put your answer in. What does DLC stand for?
So my colleagues there will put it in the comments. Yes, this is the questions. What does DLC stand for? Answer can be found here. I just now saw that actually the also have people answered it already. So be fast and attending, all right? The first 30 available. Okay, so you can continue your slide while people continue answer from there.
All right, sounds good. All right. Okay, so I think that's where I was just where I stopped off was just showing you guys how does the 5 times or the 5 times or the 7 times work on the DLC. Where does that leverage performance come from? So you can see over here that's where it comes from. How it relates. If the underlying moves by 1%, the DLC will move by 5%. In case here, if Meituan moves by 8%, then the Meituan short DLC will move by 40%, around there. All right. I mean, it will decline by 40%, while the long will gain by 40%. Another important thing I want to highlight to everyone here, when you're trading the DLCs, it's important to look at the intrinsic close of the DLC. So I think in the middle of between the 2 arrows you see over there, you can see the word last intrinsic close at 0.526 over there, 52 cents or 53 cents around there. So the intrinsic close is a very important sort of figure as well for investors to be aware of. The intrinsic close is the daily mark-to-market value of the DLC. So it's the day-end close price of the DLC that takes into account the overnight costs and fees. So this intrinsic close will be published every day on our website, dlc.societe.com, for every single DLC. All right. So this intrinsic close will be published there. And then take note that the next trading day, the 5 times performance or the 7 times performance on the DLC will be with reference to this intrinsic close over here. All right. So take note over there, this intrinsic close value that we publish on our website for every single DLC every single day. All right. So I think that's the basics of DLCs on how does a 5 times performance work or the 7 times performance works. Let's go a bit more into the practical of it before we go back to what are some of the key features on the DLC. All right. So on the DLCs, those who are really want to go in and trade the DLCs, I think first question they'll ask is, how do I trade the DLCs, or when do I use the DLCs? All right. So we all know that it's a short-term trading instrument. It is not a buy and hold instrument. So take note of that. Really, it is a short-term trading instrument that you can use for day trading, swing trading, or even hedging purposes. All right, day trading, as the name says, you can trade it intraday. You can be for those who are scalpers or very active traders, they want to take off a few ticks during the day. You can use the DLCs for day trading, and it's exceptionally useful for day trading. We do see a lot of intraday traders on the DLCs. And then swing trading is more of a bit longer term. You can hold it for a few days or even for a few weeks. So this is more for position traders who think that, okay, Alibaba stock is going to rise in the next few days or a few weeks. I want to capture this uptrend, so I will use the DLCs to enhance my return. All right, so swing trading is also another popular way that investors would adopt when using the DLCs. And lastly, hedging. So hedging is mainly on the short DLC. So if you're holding a lot of Alibaba stock or Tencent stock, etc., and you want to hold it for long term because you believe in the China growth story, etc., but then you are afraid that there could be a short-term market correction on Alibaba or Tencent because maybe China looks like they are going to have some regulatory reform or some macro sort of headwinds. Then you could use the short DLCs on Tencent or Alibaba or even Hang Seng Index to hedge your long-term investment portfolio. All right, so this is an example of a day trading example of DYXW, the 5 times short Tencent DLC. All right, so you can see over here, the 5 times short Tencent DLC stock code DYXW rose from 8 cents to 10 cents. So that is a plus 25% gain for an intraday trade on this DLC. All right, that's on the back of Tencent falling around 5% during this 9:30 to 3:30 p.m. Trade. All right. So this is on a very on a particular day on 30th January when Tencent fell by 5%, and so the 5 times short DLC rose by 25% from 8 cents to 10 cents. So if you enter at 8 cents in the morning at 9:30, you will be able to exit at 8 cents at 3:30 p.m. around there and lock in your gain of 25%. All right. So that is an example of a day trading. So for swing trading on a Tencent short DLC, on Tencent DLC, let's look at the long DLC, 5 times long DLC, stock code DPDW. All right, so DPDW rose from $1 to $1.58, a plus 58% gain from 11 Jan to 27 Jan 2023. So that is a span of 10 trading days over there. So you will enter the Tencent long DLC DPDW at $1 and exit 10 days later at $1.58, lock in at 58% gain on the back of Tencent rising 11% across the 10 trading days as well. All right. So you can see over here, 11% times by 5 is 55%. But my 5 times long Tencent DLC DPDW is up by 58%, right? So that's more than 55%. That's an extra 3% gain. That is due to the compounding effect of the DLCs. Because the DLCs have a very important feature, a very key feature called the compounding effect, which I will touch on in depth later. But you can see that there is a gain there of extra 3% due to the compounding effect, which works very well for you in a nice uptrend. All right. So in the hedging example over here, you can see for this 5 times short HSI DLC, TZJW, that's the stock code. It rose from $1.60 to $2.40, a plus 50% gain from 16th September to 30th September, a total of 11 trading days. All right. So this example is over here. I wanted to illustrate that, if you're using holding a long-term investment portfolio of Tencent or Alibaba stock, for example, that you want to buy and hold for the long term, but you see that correction coming, right? And then, you want to make sure that you want to hedge that long-term investment portfolio. So you could potentially either go directly and buy the short Tencent DLC or the short Alibaba DLC, but you could also use the 5 times short HSI DLC CZJW. You can see over here, when Tencent fell by 9% and Alibaba fell by 8% during these 11 trading days, this HSI, where the top two constituents is also Tencent and Alibaba, rose by 50% gain. And I believe the Hang Seng Index also fell by close to 10% during the 11 trading days. All right. So you can use a broad-based index to hedge your short DLC to hedge your investment portfolio, or you can use the individual stock short DLCs as well to hedge your portfolio. All right. All right, so that is on the more of the Hong Kong stock examples, how you can use it for day trading, swing trading, or even the hedging your long-term investment portfolio. All right, so over here in the next three slides, I want to look at day trading, swing trading, and hedging using the US index DLCs as well. All right, so the US index DLCs, take note that you cannot trade the US index DLCs during Asian hours or during SGX market hours. I mean, you cannot trade it during the US market hours because it's only tradable during the Asian hours, during the SGX trading hours, 9 a.m. to 5 p.m. All right. So for investors who are not too keen to, who are not going to wake up at 11 p.m. or 12 p.m. or stay up to then to, manage their US positions, and they're willing to hold it for a few days, take a position on the, NASDAQ or the S&P 500 or the Dow Jones indices, then these DLCs could be very useful for you, especially if you are only used to the SGX market. You want to trade it in Sing dollars, you don't want to bother to hassle to change it to US dollars, then you can potentially use this US index DLCs to gain exposure to the US indices. All right. So over here in this example over here, you can see for day trading example, the TQQW, this is our 7 times long NASDAQ DLC, TQQW. It rose from $1.68 to $1.80, a plus 7% gain from 9:30 to 3 p.m. over there, when the NASDAQ E-mini futures rose by around 1% during the same time over here. So even during Asian hours, although it might not be so volatile, the E-mini futures might not be so volatile, but then, at least a 1% gain, you could potentially gain up 7% if you use the 7 times long NASDAQ DLCs. All right. So this one, if you buy at the 7 times long NASDAQ DLC, TQQW, if you buy TQQW at $1.68 at market open 9 a.m., 9:30 a.m. around there, and you sit on it and you wait while the NASDAQ E-mini futures rose around 1%, by the time it hits 3 p.m., you can exit at 180 to lock in that 7% gain. All right. So just going back into the US index DLCs, on a close-to-close basis, it will replicate that 5 times or 7 times leverage of the NASDAQ index or the S&P 500 index, cash index sort of daily performance by 5 times or 7 times. But during Asian hours, when the US indices are not trading, the DLCs, the US index DLCs will be closely related to the E-mini futures, which are trading during Asian hours as well. So we do track the futures quite closely during the SGX market hours. And then overnight, on a close-to-close basis, we will track the cash index. All right. So looking at the swing trading example over here, so this one, holding it for a few days, so which means that you cannot manage your positions during the US trading hours, but you can trade it and you can manage your positions and trade the TQQW during Asian hours, during SGX market hours. So the ones in white over here is the TQQW, the movements over the span of this 4 trading days, while the orange one is the NASDAQ index that moves during the US market hours. All right, you can see that how the TQQW actually moves in line with the NASDAQ DLC. You see it's going in an uptrend as well. If you can see between the breaks over there, that is also moving in line with the NASDAQ index. So, if you think that NASDAQ is going to rise and it rose from 4% on 13 March, so on 13 March, you go in and enter the TQQW at $1.68 just before the market closed on the 13th of March. And then you hold it, and you would see that as the NASDAQ rise in the performance, the NASDAQ long DLC TQQW will also rise in its performance across the 4 trading days. And then come to 17 March, when the NASDAQ is up by 4%, and then the next day when it opens, the Singapore market opens, you can exit your 7 times long NASDAQ DLC TQQW at $2.31 for a 38% gain on the TQQW. So there's a 38% gain for a short span of 4 trading days on the back of NASDAQ rising 4%. All right, so again, 7 4% times by 7 times is 28%. But you can see over here the Nasdaq long DLC TQQW rose by 38%. That is an extra 10% gain on that. That is due to the compounding effect again. If you manage to capture a nice trending uptrend like this, and you bought the long DLC, then you will get more than that 7 times leverage performance due to the compounding effect. All right. So lastly, on this hedging example over here, using the S&P 500 7 times short DLC CXIW, it rose from 0.45 to 0.45, so 45 cents to 65 cents, a plus 44% gain across the 6 trading days between 13th December to 20th December on the back of S&P falling 5% during the 6 trading days. All right. So again, if you manage to capture a nice trend like this, so if the S&P is in a nice downtrend on the back of it, close to close, consecutively days of down days, you will get more than that 5 times performance or 7 times performance. Over here, 5% times 7 is 35%, but the S&P 500 short DLC CXIW registered a 44% gain, extra 9% gain due to the compounding effect if you manage to capture a nice trending market like this. Nice uptrend or nice short trend, downtrend, will be able to get you the extra performance on the DLCs due to the compounding effect. All right, so this is a hedging example. If you think that S&P 500 is gonna correct and you're holding a lot of US stocks, you can potentially use the 7 times short S&P 500 DLCs to hedge your investment portfolio as well. Okay, so in this past six slides, you can see how you can use the DLCs for day trading, swing trading, or even hedging purposes. So all this can be rather short-term in nature. You can see that I have only shown like 11 trading days, 10 trading days at most, or maybe even 2 weeks at most. But you shouldn't be holding these DLCs for long term. This is not a buy and hold long-term investment product. This is more of a short-term trading instrument that you can use for day trading, swing trading, or hedging purposes for the short term. All right. So this is how you can use the Hong Kong or the US DLCs to be able to gain exposure to markets beyond Singapore shores. You can gain exposure to the Hong Kong stock market or the US stock market from the comfort of here on SGX using these DLCs. All right. So again, you can just look up this stock code CXIW on your Tiger Brokers platform, and then you should be able to see the 7 times short S&P 500 DLC over there. Okay. So a very important feature on the DLCs which I want to emphasize on is the compounding effect. So you can see that the DLCs will give you that 5 times or 7 times performance on a close-to-close basis. But over a period of time, that could vary. The performance could vary from the leverage factor. All right, because of the compounding effect. And compounding effect can work for you in a nice trending or a strong trending market, like the ones I mentioned earlier in my examples. It can give you more than that 5 times or more than that 7 times performance on the underlying assets daily performance due to the compounding effect. So it can work for you in a nice uptrending or nice downtrending market. But in a volatile or sideways market, it might not work so well for you for this compounding effect. So that's why it's very important that you understand this compounding effect feature, and also understand that this is a short-term trading instrument and not designed to be held for a long period of time. All right. So on the table on the left over here, you can see the underlying. We start with a base of 100. It goes up by 1% on day 1, 2% on day 2, another 2% on day 3, and gives you a total of 5%, 5.08% across the 3 trading days. All right. And then on a close-to-close basis, on a daily basis, you can see that the DLC gives you that 5% on day 1. 1% times 5 is 5%. Day 2 is 2% times 5 is 10%. Day 3 is 2% times 5 is another 10%. At the end of the 3 trading days, the DLCs, the 5 times DLC has rose from $2.50 to $3.80. That represents a 27% gain on the DLC. All right, 5% times 5 is 25%, but over here, the DLC is giving you an extra 2% due to the compounding effect. So it's giving you a 27% gain. This is due to the fact that every day your gains and losses are locked in. So your 10% gain on day 2 is off a higher base of $2.63. Your third day, your 10% gain is off a base of a higher base of $2.89. So that is compounding. The gains are compounding, and therefore you can get more than that 5 times performance across 3 trading days. All right. So this happens if you hold the DLC for more than a day for a period of time. Then you have to be very careful of this compounding effect. Otherwise, if you're an intraday trader or a day trader, then you would see that the 5 times would mirror it almost exactly, the 5 times performance, if you're only a day trader. All right. So you can see on the table on the right over here, this is where the compounding effect might not work so well for you in a volatile or a sideways moving market. All right, you can see over here that the underlying is up by 2% on day one, day two is down by -4%, and day three is up by 7.31%. All right, a total of 5.08% across the 3 trading days, same as the first table. So it's 5.8% across the 3 trading days. And then on the DLC, you can see again, on a close to close basis, it gives you that 5 times performance. On day one, it's up by 10%, 2% times 5, 10%. On day two, the underlying is down by -4%, so the DLC is down by -20%. And then on day three, plus 7.3% on the underlying equates to a 37% gain on the DLC. All right, but in total, over the 3 trading days, the DLC only gives you that 20% gain. So 5% times 5 is 25%, but the DLC only gives you a 20% gain. So you're not given that 25% because of the compounding effect again. All right, so every day your gains and losses are locked in. So on day two, when the underlying fell by 20%, and then the DLC fell by 20, the long DLC fell by 20%, the day three gain of 37% is based off a lower base of $2.75 on day two, $2.20 on day two. Therefore, it gives you less than that 5 times performance across the 3 days. All right. So this compounding effects or compounding returns is a very key feature of the DLCs. For those of you who might have traded the T-triple-Q or S-triple-Q, the ProShares Ultra, long and short DLCs, you will know that, this, it was exactly the same payoff as the T-triple-Q or the S-triple-Q. And they all have this compounding effect feature that is very important in such leverage and inverse products. All right, so you have to be careful of how you your conviction of the market, whether you think it's going to be a strong trending or down or market, or whether it is going to be a sideways market, and to exercise discipline in terms of if it becomes very sideways moving market, it might be better to cut loss or cut your positions in that sense. All right, but in a strong trending market, definitely the DLCs will work very well for you. I think as a trader, you have to understand the features of the products that you trade in, whether is it your T-triple-Q or S-triple-Q in the US, or whether is it the DLCs, they all have this compounding effect feature. All right. All right, so this is just an example over here on the T-triple-QW. So in a good example of positive compounding of how it can work for you. In a strong trending market like this, where the NASDAQ gained 5%, 5.3% across the 5 trading days, the DLCs can give you more than that 5 times performance with a 40%, close to 40% gain. But in a volatile market or sideways moving market like this, across 13 trading days, the NASDAQ is up by 4%, but the 7 times long DLC is only up by 23%, less than that 7 times performance. All right, so the longer you hold it, the longer you hold the DLCs or over a longer period of time, say 6 months or 1 year, we all know that markets don't move in a one direction. It doesn't move in a straight line up or straight line down. There's always a lot of mean reversion happening. It might come back to the mean, or it could go sideways for a while, etc. Therefore, in the long run, it's harder for investors to get a conviction or belief on how the markets will move in the next few days or next few weeks. All right, in longer term, it's harder for investors to see what the direction of the market could be, and it could be there could be mean reversion, etc. Therefore, the compounding effect will only become stronger in the long period over a long period of time, and therefore the DLCs again emphasize that the DLCs are designed for short-term trading only and not meant to be held for long periods of time due to this compounding effect as well. Okay. So I hope you understand what the compounding effect is. If you are not too clear still, please feel free to visit our website dlc.songjian.com, where you can find out more information, more illustrations about the compounding effect, so you can make sure that you understand it before you start trading the DLCs. All right, and this is one of the last few slides over here. So this is just a quick comparison of what are the DLCs versus other leverage products out there, right? So just to emphasize again, the DLCs are listed on the SGX securities market. All right, so it is a securitized product and it's not a margin product. All right, so CFDs out there, contract for differences, are margin products. All right, so these are margin products that where there is a risk of margin call. So if you trade the CFDs, you could potentially get a margin call if the underlying moves adversely against you. Whereas the DLCs, you put in $1,000, that's the most you can lose. All right, you buy $1,000 of DLCs, that's the most you can lose. You will never be asked. There's no margining involved, so you cannot lose more than you've actually invested. All right, so that is one of the key difference between DLCs and CFD. DLCs are not margined, the leverage is inbuilt into the leverage formula, into the formula of the DLC itself. Whereas the CFDs, you get the leverage from the margin that you put in. You put in $1,000 margin, you can trade up to 5 times or 7 times that exposure. All right, but with that margin comes the risk of the fact that your losses are not kept. You could potentially lose more than you invested if the underlying moves adversely against you. All right, on derivative warrants or options, again, the DLCs are not option type products. There is no implied volatility, there's no time decay, it's not in the money, not in the money, out of the money, at the money kind of concepts. So you don't have to choose which strike price, etc. So this is on the DLC. It's not an option type product. It's a more linear product. The payoff is similar to your leverage and inverse ETFs, your TQQQ or your SQQQ that you trade on the US. The payoff is exactly the same as that. Just that the DLTs are a certificate structure versus those leverage and inverse ETF structures, where the ETF a fund structure and the leverage factor for the DLTs can go up to 7 times, whereas for most leverage and inverse ETFs, the leverage is usually capped at 2 times or 3 times. Okay. And so this is about the end. I want to just show you guys a bit of a tour on the website. Maybe you can stop here for another quiz question, should we? Or if not, then we carry on first. All right, we can carry on first on this to the website. Let me just quickly.
I think it's better to have the questions now because I see the answer is in your previous 2 slides. So,
okay.
Maybe put one for you to not too far away that just with your questions and also some hint for them, right?
Okay,
so
I will ask the second question now.
Yeah, you can post. I mean, hi, Clary, please put on the second questions, and Marcus can read out the second questions with the 2 slides before have the hints there.
Okay. So I would say that the second question is slightly harder than the first question. So the question is, what is the maximum leverage for the DLCs on indices? All right. So for the index DLCs, what is the maximum leverage factor that we have on the DLCs? Okay, so that's the second question. Fastest finger first. So please hurry up, put in your answers into the platform. Okay, so I think that's the second question. I will move on into the last part of my presentation, where I'll go into a bit more practical on where to find the DLCs, where to find more information about DLCs. So I will just quickly share my website, the dlc.socgen.com website. Okay, so I hope you guys can see this is our website, dlc.socgen.com. All right, so this is our website that we have for the DLCs. So please visit this website. You can find out a lot more information about the DLCs over here. So okay, you can find a product from here if you want to. Over here, you can choose the underlying, or you can type in a specific code. But otherwise, if you want to see the full list of the DLCs, you can always come over here under products, search, and then you can find the DLCs over here, the full list of 304 DLCs that we have listed on SGX. And say you want to look at, Meituan is quite a big mover today. You can look at Meituan stock, for example. So if you want to look at Meituan stock over here, 3690, you can see over here, and you want to look at the long DLC, for example, if you want to gain exposure to Meituan long on the long side. And then we only have 5 times leverage on this on the single stocks. So this is our 4 Meituan long DLCs that are listed on SGX. All right. So these DLCs are priced at 30 cents or 7.7 cents over there. So that is the price of the DLC. So if you're in doubt as to which DLC to choose, right, there are 4 long DLCs over here. Always look for the red star indicator over here. The red star indicator will tell you which is the most sensitive DLC. So by sensitive, what I mean is that for how much move on the underlying stock is required for the DLC to move 1 tick. All right. So over here in this example, you can see over here for the most sensitive DLC DZOW, the 5 times long Meituan, at 7 to 8 cents price level. The sensitivity is at 38 cents. All right. So for every 38 cents Hong Kong currency move on the Tencent on the Meituan stock price, every 38 cents move on the Meituan stock price move, the DLC will move by 1 tick. And 1 tick over here at the 7 or 8 cents price level is 0.001. All right. So for every 40 cents move on Meituan stock, this DLC will move by 0.001. All right, in its price. So that is the sensitivity of the DLC. On the other one, 5 times long Meituan DLC DAVW, for every 46 cents move, you can see on the column on the right over here, sensitivity. Every 46.6 cents move on Meituan stock price, the DLC will move by 1 tick on the 30 cents DLC over here. And at 30 cents price level, the minimum tick size for the DLC is 0.005. So for every 46 cents move on Meituan stock price, this DLC will move by 0.005. The price of these 30 cents DAVW will move by 0.005. Okay, so sensitivity is for those active traders, for those who are intraday traders, etc. They will want to choose the most sensitive DLC to give them the widest range. All right, so that is how the DLCs work. And if you're in doubt, always look at the red star indicator for the most sensitive DLC to choose. All right. So no matter what, whether is it despite the sensitivity, the difference in sensitivity between the DLCs, take note that all the long DLCs will still give you that 5 times performance of the underlying asset, underlying stock, underlying Meituan stock daily performance. All right, all of them will give you the same 5 times performance, just that how fast it moves, how much it moves in terms of the ticks, the range is different because of the minimum tick size across different price ranges for the DLCs. All right. So in this case, if you are bullish on Meituan stock and you want to gain exposure to Meituan on the long side, you want to benefit from a rise in prices on Meituan stock, you would choose the DZOW, the one with the stock code DZOW. All right. So besides the sensitivity and the red sign indicator, another thing you can look at also is the outstanding quantity. So outstanding quantity is how much we have actually in investors' hands, right? How many have been sold into the market? Over here, 6.8% or 5% of the DZOW is in the hands of investors. So you want to choose a DLC that is not too close to 100%. If the DLC is close to 80% or 90%, that means it's close to being sold out, because all the DLCs all come in a finite issue size. And if in the end, if it hits 100%, the DLC will be considered sold out. In that case, for us as the issuer, the designated market maker of these DLCs, you will not be able to put up any more ask prices. You'll not be able to sell any more to investors, but we'll always still put up the bid prices for investors to sell back to us. All right. So if you want to accumulate your positions, then if it comes in a sold out position, you will not be able to accumulate anymore. Therefore, always choose those that are outstanding quantity for less than 50%. All right. All right. So in doubt, please choose the red star indicator over here. Looking at the short DLC side on the Meituan, you can see over here we have 5 short Meituan DLCs over here. And again, you have DLCs at different price levels, and you want to choose the most sensitive DLC over here, DZNW, to be able to gain short exposure to the Meituan stock price movement. Okay, to benefit from a decline in Meituan short stock price, you will want to buy the short DLC over here, and the most sensitive one is DZNW. Okay, so that's where you can see, how you can choose the DLCs, how you can see the whole list of DLCs over here, 304 DLCs listed over here. And you can see that a lot of them are on Hong Kong stocks. I think that's where the benefit of the Hong Kong DLCs come in. A lot of it can be quite expensive to trade on the Hong Kong exchange. Also, it's quite a high minimum investment sum. To buy a BYD stock, for example, requires $20,000 Singapore dollars minimum investment sum to gain exposure to BYD. It could have changed a bit by now, but I recall it's still quite a high sum. I don't think everyone has $20,000 to put in at one go into the BYD stock. So you can use the BYD DLCs to go in tranches, or even have a go in smaller position size using the BYD DLCs instead. Okay. All right. And so you can choose from here under our products, under search page over here. You can find more information about the DLCs over here, the compounding effect, which I mentioned on later, just now. You can find more examples over here under our education tab. You can also find more videos on our website, dlc.socgen.com. Some videos, animation videos of how the DLCs work, but also me explaining some of the practical guides, the practical steps on the DLCs. How do you select the right DLC for your target exposure? What are some of the benefits of using DLCs, and how to calculate your profit and loss on your DLCs? All right. So I'll be posting more videos hopefully in time to come for you guys to be able to learn more about how to trade the DLCs, as well as some practical steps on some pitfalls that you can watch out for when trading the DLCs. All right, so you can find out more information on our education tab over here, as well as the FAQ page as well. All right, and lastly, under our markets tab, you can find more information on the market insights. You can find out what are the top 10 DLCs. You can see what are the top 10 DLCs that are traded over here by value, by volume, top gainers, etc. As well as on the underlying stock, which one has the highest turnover change, underlying stock itself. What are the top gainers, top losers on the underlying stock itself. All right, as well as fund flow data on the southbound stock connect, which one have people been trading on the southbound stock connect. You can see over here, Tencent, Meituan, Kuaishou is the most actively traded on the southbound stock connect. And on the Singapore fund flows itself, you can also see what are the insti, retail, or net, or buying in the Singapore stock market on the underlying stocks. To get some trading ideas, to get some insights, as well as to learn more about the market, learn more about what are the different Hong Kong stocks available for you to choose from. Whether it's Geely, HSBC, JE.com. Some of these stocks you might not have known beforehand. So this will help you to be able to gain some insights as well into what are the list of Hong Kong stocks available for you to trade. Okay, so I think that's our website. But the most important thing on our website over here is on the top right hand corner over here, the DLC hotline, 62262828. So if you have any questions, any feedback at all on the DLCs, my team and I, we're on standby during SGX market hours, 9 a.m. to 5 p.m. to answer any questions that you have on the DLCs. Any feedback that you have as well, please do feel free to give us a call, and we'll be happy to be able to guide you and give you some, clarify any of your doubts on the DLCs, or even give you a one-on-one DLC refresher or DLC tutorial. Please feel free to call us. We're happy to answer any questions that you have on our hotline. All right, so I think that's all I have for the DLCs. I hope that this session has managed to give you a bit of insights into what are the DLCs that are listed on the SGX securities market and how you can use them to gain exposure to not just the Singapore stocks and indices, but also to the Hong Kong stock indices, US indices, to gain exposure beyond the Singapore shores from the comfort here on SGX securities market. All right, thank you everyone. I think we have come to the end, and we'll do the last question right now, I believe, so that we can close off this seminar as well. So the last question, let me look at the last question. So we have a final question for you guys to win the vouchers. The last question is, if the underlying index gains by 1% today from its previous close, what will be the gain on the 5 times long DLC? So this should be quite straightforward as well. I repeat again. If the underlying index gains 1% today from its previous close, what will be the gain on the 5 times long DLC? All right, so that's the last question. Please put in your answers into the platform, so that they can select which one are the winners for this final voucher giveaway. All right. Okay, if not, I think that's all for the session. Please quickly put in your answers into the comments box. The last question has been released. And thank you again for participating, all of you guys for participating in the quiz questions, all the 3 quiz questions, but also for sticking around and hearing my introduction on the DLCs. I hope that you guys have learned something today, and that you know what the DLCs are now. So if you look at your SGX screen, you will see these counters over there. You will not be surprised by what are these. All right, so these are the DLCs that we have listed on SGX securities market, all 304 that Societe Generale has listed on SGX, for you to gain exposure to the Singapore, Hong Kong, and the US market as well. All right. So I'd like to take this opportunity to thank Tiger Brokers again for organizing this session today. For me to share with you guys about this product that we have listed on SGX securities market. It is quite a niche product, a short-term trading instrument which not everyone might be aware of yet. So we are happy to have this opportunity to shed more light on it and to raise awareness on this DLCs, daily leverage certificates, for investors to use for their short-term trading needs. All right. So thank you, Tiger Brokers, and I think we can close off this webinar for today. All right. Thank you.